Whether you visit an electronics store to get your hands on the most awaited iPhone model, or you visit a vehicle store to purchase the bike that you always wanted, you'll find it quite difficult to ignore this company. They're literally present at every avenue of consumption and investment, enabling you to fulfill your aspirations quite easily. Be it consumer durable financing, lifestyle financing, vehicle loans, personal loans, gold loans, home loans, working capital loans. You name it and they have it. No wonder it boasts the most comprehensive range of credit products across several categories. Which is this company that has been at the forefront of enabling credit for over 58 million Indians, transforming the way they purchase? Well, it's none other than Bajaj Finance Limited. Welcome to Upsurge.club, where we talk all about stock markets and the companies that have tremendously done well on it. Bajaj Finance yields the most promising results. Results that the Indian banks dream of achieving. It is a consistent long-term wealth maker. In fact, it has given a spectacular 100,000% return since 2000, something that even American tech giants fail to match up to. They have exhibited a 37% yearly growth in assets under management over the last 10 years, with their aggregate loan book size growing to rupees 2 lakh crore, something which is a great deal for an NBFC. And meanwhile, this growth hasn't come at the cost of hurting bottom line. In fact, they have witnessed a 51% PAT growth over a 10-year period. What is it that which is working for Bajaj Finance? What is it that sets it apart from banks and NBFCs alike? Let's find out. Let's trace back to the origins of Bajaj Finance. This goes back to May 2007, where Bajaj Auto, in a restructuring move, split into three entities: Bajaj Auto Limited, Bajaj Holdings and Investment Limited, and Bajaj Finserv. Bajaj Finance is a subsidiary of Bajaj Finserv, among other subsidiaries involved in wealth management and insurances like Bajaj Allianz General Insurance and Bajaj Allianz Life Insurance. What started out as an auto financing arm for Bajaj Auto back then, today offers the best range of credit products. In fact, from just 9 products in 2012, it offers 50 plus products today. All this is a result of an intelligent observation Bajaj Finance had back in 2008. Back then, loan products were primarily limited to purchases and investments having a high ticket value, such as car loans, home loans, and land loans. This is because the process of loan application, screening, and approval was quite tedious, time-consuming, and costly. As a result, consumers were unwilling to take loans for small value purchases. Also, if we look at it from a bank's perspective, the return on small value loans does not justify the operational costs involved in the same. It is this white space that Bajaj Finance set out to exploit, that is to cater to uncatered markets. It also pioneered the use of technological best practices in the Indian lending scene by using data mining to determine consumer credit risk. With a humongous amount of data being fed into the system for hundreds of variables, loan processing becomes faster and more accurate. It is this moat that Bajaj Allianz used to establish itself as the most customer-friendly lending company while also ensuring low risk. It started with the consumer durables as a segment. Today, 70% of India's consumer durables is financed by Bajaj Finance. There are several reasons attributable to its exponential growth. First, the rise in purchasing power of consumers, with incomes almost doubling within the last 10 years. But how does that in any way set Bajaj Finance above others? Well, yes, that is where they introduced its ingenious no-cost EMI scheme. This was an immediate hit with the consumers, since it allowed them to spread the cost of their purchase over several months at no interest, at the cost of paying just 1% as processing fee. Now, you might be wondering how come it enjoys such great margins charging such a meager fee. Well, they have a bigger revenue source, that is discounts from manufacturers. They are willing to shell out as high as 5% to Bajaj Finance to enable customers to purchase their products without any hesitation. Again, quite an intelligent way of extracting value out of the ecosystem without hurting the consumer. Moreover, if you observe, Bajaj Finance is very well positioned from a strategic standpoint as well. There are several reasons to say so. First, having a wide portfolio of products along with key strategic partnerships with other players enables it to cross-sell and upsell products to its large customer base of 58 million people. Secondly, household debt to GDP is significantly lower in India as compared to our counterparts. This provides a significant headroom for Bajaj Finance to expand its loan book. Third, it enjoys a significant advantage over banks due to the fact that over 35% of its profit before tax comes from fees, which is unaffected by interest rate volatility. So it faces margin pressures quite less. Finally, it enjoys a lower cost of capital, which boosts the net interest margins. Bajaj Finance strongly believes that it is not in the business of lending nor distribution. Rather, it's in the business of managing risks. No wonder they have the best risk numbers. Their gross NPAs have never crossed 1.7% all these years. Moreover, they have also witnessed a dramatic increase in the rate of business with existing customers, which bears less than half the risk of doing business with a new customer. Consequently, even after increasing their loan book, their risk has fallen instead of rising. Moreover, it is very disciplined in terms of its gearing, that is proportion to debt to equity capital, which is capped at 7 times. It is due to all this that it has won great trust over the years, making it the darling of every investor's eye. Even after having such a wonderful run, it shows no signs of peaking. It is as ambitious as ever with respect to its future. It has recently doubled down in the housing finance space and has already become the fourth largest player in the market, with their AUM growing at 45% CAGR and PAT growing at 85% CAGR. It also plans to enter into the securities business, leveraging the huge customer base it has. Over time, it wants to create a super app providing all digital consumer services under common roof. At the same time, it faces some key risks in the form of its loan book peaking a few years down the line, coupled with rising competition from fintechs. What do you think? Will Bajaj Finance continue to ride its meteoric growth wave, or will it succumb to growth pressures? Let us know. And meanwhile, make sure you hit the like button so that the YouTube algorithm works in our favor.